All right, guys. So good evening once again to everybody. Welcome to the weekly market roundup powered by Tentrade. My name is Tobi Okunaga, and in this particular webinar, we just want to take a look at what happened this week and talk about our experiences this week and see how we can make next week a better trading week for us. All right. So I want to use this opportunity to possibly answer some of our questions. How was the trading week, guys? Let's have some engagement. If you are here and then you traded this week, type in yes in the chat box. If you entered a few trades this week, type in yes in the chat box. If you did not trade this week, type in no in the chat box. Let me know if we have active traders on here. All right, Victor traded. Awesome. Thank for response, Victor. Who else traded this week? If you didn't trade, type in no in the chat box. If you traded this week, type in yes in the chat box. Okay. So, Victor. You said yes. How was your experience trading this week? Awesome. Bright also traded. Fantastic. So let us hear from Victor and Bright. Victor, can I unmute you so that you speak? Okay, just let me know your experience this trading week. Bright, I'm also going to unmute you so that you speak as well. Let's just interact and see how we can now and then speak.
Hello, good evening, sir.
Good evening, Mr. Victor. How you doing?
Good evening, everybody. Okay, this week my experience wasn't too good. I lost a lot.
Mr. Victor, can you hear me? Mr. Victor,
I can
you
hear
said you lost a lot? Yeah, I can hear you now. Please come again.
My experience this week wasn't great. I lost most of my trades.
Whoa, okay.
Yeah.
Can you tell us the currency pair that you traded this week?
Mainly gold.
Gold. Okay, you're a gold trader. All right. Okay. Did you when you took the trades and then you lost, did you learn from the losses? Did you know possibly why you lost those trades?
I haven't taken a good look at reviewed the trades. I was hoping to do them. Do that maybe tomorrow.
Okay. All right, good. So please, what I've accepted as a forex trader is to accept losses. Losses is part of the game, but most importantly, when you lose trades, you want to also learn from it. So there's a reason why you lost is possibly because you were not following your strategy or you overlooked some certain price action. All right. So whenever you lose a trade, it is either you were in line with your trading strategy, which is fine, or you were out of line. So it's good to review. So please do that before the next trading week. We would also take a look at gold together evening and see what happened with gold. Okay, thank you for sharing that this week, Mr. Victor. So do you trade only gold or you trade any other pair?
I trade gold and currencies.
Gold and currencies. All right.
Yeah. I don't have a specific pair I look at.
Okay.
Mainly gold.
Mainly gold. All right. All right. Thanks so much. Bright, I'm going to unmute you now, Bright. Bright, you can unmute yourself and speak now. Bright. So let's see. Let us hear from you. How did your trading week go? In Tanko, you're welcome. Bright, do you want to speak to us? Godwin, how was your trading week, Godwin? Did you take any trades this week? Was it a profitable week for you, or you lost some money? I want to hear from everybody here, since it's a very compact class. Let's see how we can optimize our trading system, check out what happened this week, and prepare for the next week. Ambrose, did you trade this week, Ambrose? Godwin, did you trade this week? Bryce, do you want to say something? Bryce, you responded that you traded. Okay, so Bright is not the one to talk to us. How about Godwin Tanko? Did you trade this week? All right. So Ambrose said, I made massive profit. Godwin Tanko said you traded. Godwin, fantastic. Our experience is with Godwin. We are doing a market, the weekly market roundup, and I'm trying to get feedback from everybody here. How did your trading week go? And then how we can optimize our trading. Ambrose said 1K to 3K. Okay, Bright is in a noisy background. Okay, perfect. Godwin Tanko, do you want to talk to us and tell us how your trading week went? Ambrose, okay, let's speak to Ambrose. Ambrose, you have a very good week. You were able to turn $1,000 to 3K. Ambrose, so unmute yourself and then speak to us. That's a very, very good week for you. So that means you tripled your account this week. How did you do it? Share with us. Okay, Ambrose. So just meet yourself, Ambrose, from your end and then speak. Let us hear from you. And we can hear you loud and clear.
Okay,
yes, loud and clear.
I didn't expect it this week. Like JPP USD has been a very massive profit for me.
Oh,
Though
perfect.
I was SMC, so I used that strategy to just flip it and scalp it. And later I just made $200. I withdraw $200. I withdraw to my wallet. That's how I used to trade. I keep withdrawing to complete 3,000 to my wallet. I was not storing my profit on the Mentor 5. Immediately it clock 400, I'll withdraw it to my wallet until I hit my target. That's when I withdraw to my bank account.
Nice. That's I mean, so you're able to do that majorly on GBP USD. Okay.
Yes.
Were you taking longs or shorts? And which time were you taking entry from?
I was buying all this since last week.
You've been buying. Nice. Yeah, so that means you're
buying.
Okay, good. So you're buying this mobile. Nice.
Yeah.
Interesting. Thanks so much for sharing. Okay, so thanks so much. I'm really excited that you're able to make money, Mr. Ambrose. Awesome. So let us take a look at a few pairs, what happened during the week, and let's see possibly what will happen the following week. Let us start with gold. Mr. Victor was trading gold, or traded gold rather. All right. So let's see possibly what happened on gold. Okay. So 4-hour time frame. Now I want to recommend that we what's it called? That we try and do multi-time frame analysis on our pairs. Is really going to help you put things into perspective when it comes to trading, entering at very, very good zones. All right. So let's start from the weekly time frame. Now, from the weekly time frame, what do we see here? We can see that price is bearish, and over here right now, price has been dropping from this supply level here. Okay, this is a supply zone. Price currently reacting to the supply. So this drop that is currently going on gold, right, was triggered because price hit this supply here. Okay. Now, so that's telling us that the ultimate, market direction of gold is bearish, all right? But when the move is bearish, there's still room for corrections and retracements and pullbacks and things like that. Now, so in the last 2 weeks, we've been seeing some form of pullback correction on gold. All right, so let's go to the lower time frame and see exactly what really happened this week. What is the trigger? What is triggering the move this particular week? Now, in order to get market structure properly, I like to shift my candlestick to the high Kinashi. Now, when you switch to high Kinashi, oops, you will see exactly why gold has been buying, and I'll give you a very good entry shortly. So look at what's going on here. Price is currently reacting at this demand here. Okay, there is also some form of imbalance here for people that trade SMC, but ultimately over here, this is a demand level on the daily time frame. Okay, so price hits a demand zone on the daily time frame. All right, on daily time frame, that's why we are seeing a bit of bullish activity here. And then let me give you exactly what happened. Why is gold currently going up like so? Okay, what is a trigger? Now, when you look at this market structure here, now we've already identified that on the daily time frame, this is a demand level. Now, what do we mean by demand zone? Demand zone, rather, is a zone where there's a lot of institutional orders for a buy. That means a lot of people are interested in buying. Okay, so that means the order flow is bullish. Okay, now daily is saying that this is a demand zone. Now, if you go to a lower time frame, you should also be looking for opportunity to buy. All right. Now, check out what is going on here. Now, let us rewind this for a bit. Let me show you. This is a 4-hour time frame. I'm going to rewind up until this place. Now, this is what we have here. So price is somewhere here. Let's check this out. Now you can see the order flow going still kind of bearish like so. Okay. And then what is happening now? So on the daily time frame over here, this is a demand zone. So we are looking to buy. So on a lower time frame as well, you should also be looking to buy. So on the 4-hour time frame, to get into a very good entry, you want to wait for this bearish momentum to turn to a bullish momentum. And at what point did that happen? We see this lower high here being taken out like so. All right, so this lower high was taken out by this move. Okay, and then ultimately when and if this happens, the place where you now want to take entry, right, will be at this extreme demand here, somewhere around here. All right, so you want to wait for price to retrace into the zone before you take your entry for a buy. All right, so you can choose to do this on the 4-hour time frame if you are a swing trader, or when price gets into this zone on a lower time frame, you look for buy opportunities. All right, so let's say you're taking this from the 4-hour time frame. You would have put a buy limit somewhere here, put your stop loss a bit above the zone, and then you're going to target. So let's see what price. Let's play this for real quick. All right, so you can see as price would actually follow through. Now price to buy because on a higher time frame we are seeing a buy bullish. Good. So you can see what happened here. This is Tuesday, March 7th. So this happened on this week's Tuesday. All right. So price tapped into this order block here, and then another good confirmation is that there's imbalance here. So that means there's a lot of unfulfilled buy orders here. So that's why you can see price tapped into this quickly into the zone. And then let's see what price is doing. So why gold has been bullish this week is because of this order flow shift, okay, that happened on the 4-hour time frame. And as you can see, if you had entered this on Tuesday, you would have been in massive profit, right? This is a risk to reward of 1 to 8. So possibly if you are risking, let's say 1% of your account, you would have made 8% profit as of today. Okay, if you are someone that is a bit more aggressive and then you are risking like 10%, you would have made, possibly 80% or even double your account. Okay, so that was what happened on gold. So if you have possibly been doing something else, is because you were not actually looking at the market structure properly. All right, so Mr. Victor, I think possibly this week, maybe you were selling because the momentum is actually bullish. So I believe that if you had been looking for buys, you would have been on the right side of the market. Okay, and then you have possibly been winning. All right, makes sense. So looking into gold next week, we can see price already giving us a new high, like so. All right, so we have a structural level of a new high. Price is still printing. Possibly, if the body closes above this zone, that would be a verified high. So that means there's a lot of so that means there'll be a demand zone here. So my recommendation in this case, so possibly next week or next few days, depending on how the market moves, you want to wait for price to retrace into this demand zone. All right, so and then this demand zone coincides with imbalance here. There's a lot of unfulfilled orders here. So you want to wait for price to retrace into this zone. Once price retraces into this zone, you want to look for opportunity to buy. Okay. Another place that you can look for buy opportunities is at this level right here. Okay, which is a bit risky, but still a good zone to look for buys. So either price retraces into this zone, or you wait for price to retrace into this level and then look for buys. Okay, ultimately, the order flow on gold is currently bullish. I want to recommend that try and avoid any counter trend move on gold. It's quite risky. All right, so by counter trend, I mean possibly if you are trying to sell from here into this move, you might be lucky and then the market goes your way. But one thing about counter trend is that there's a lot of fake outs, and then your stop loss might be taken out a whole lot before the price moves in your direction. Okay, Ambrose is asking, is that place base? How do you know that opportunity will hold on that base? Because of the number one, because the order flow is now bullish, we can see higher high being created. That means the momentum is bullish. So if you want to buy in a bullish environment, you want to wait for price to retrace into a demand zone. So looking at this market structure here, the demand zone that we have is this zone that I've highlighted here. We can see over here, can see a bit of structure here. This is a demand zone. All right, there's a push down before the move up. This is another demand zone here, push down before the move up. And then on both of these zones, this candle can see imbalance here. So I have an indicator called imbalance that helps me know where there are unfulfilled orders in the market. All right, so there's imbalance before this demand zone. So price will most likely tap into this demand. So we are going to see definitely, if price should retrace into this zone, we are going to see some form of reaction here. Now, this is a 4-hour time frame. If you're able to go to this zone on a lower time frame, like your 5 minutes or 1 minute or 2 minutes, you definitely see a very good scalp setup here. All right. If price should break this zone, you would also see a setup here. Now, why do I also think so? Because price is also at a discounted zone. So when I take this swing high, so you can see, all right. So for when price, if price should retrace into this zone, you can see it is below the 0.5, which is a discount, is a discounted zone. All right, and a lot of times for price to buy, it will correct into a discount before buying. So there's a lot of confirmations here. All right, so that's what I'll wait for. So this might happen next week. If this happens, look for buys in this zone, look for buys also in this zone. Okay, exactly. Mr. Victor and Ambrose, does that make sense to you? Let me know if it's a bit clear. Okay, let's check out what went on GBP USD. All right, this is GBP USD on the 4-hour time frame. Okay, Victor said makes sense. Perfect. All right, so what's going on? Let's check out what's going on the weekly time frame. On weekly time frame, what do we have here? Price is currently giving us a bearish momentum ultimately. So check this out. Price is currently reacting to this supply. All right, so this is a weekly chart, by the way. All right, so, and on the weekly, what do we have here? You know, we have a possible, we can check this out, M pattern here, double top here. So when I look at things like this is liquidity here. A lot of people's orders, stop loss is still sitting above the zone. So possibly, this is liquidity that can be grabbed over here. So if the market makers, if they see a lot of liquidity here, they are going to try and push the market into the zone to take out people's stop losses. So there's still going to be possibility of a lot of bullish move in the next couple of days, let's say like 1 or 2 weeks or even a month, right? So we might start having bullish move. Meanwhile, a lot of retail traders are going to be trying to be selling, all right? Because on other time frame, like daily, 4 hours, you are going to be seeing price getting to a resistance. So let's go to daily time frame, for example. Let me show you some things, okay? Now you can see that this is, okay, you can see this is a resistance zone. You can see. So price definitely, there are a lot of orders sitting here, guys. Okay, this resistance. So price will most likely come back into this zone. Once price gets back into this zone, right, a lot of people will be willing to sell here. So this is some form of inducement here. A lot of retail traders will be selling here. And then that's a setup for the market makers to grab liquidity. Now, why do I also think that price will still come up here? Look at this trend line liquidity here. Okay, this is a trend liquidity. So price will most likely still break this zone to the upside, and so this is a trend liquidity. There are a lot of orders here. All right, so price most likely on GBP/USD still has a long bullish ride to go. And when price gets here, a lot of people are going to, be having a really bad week if this happens, because people's stop losses will be taken out. Okay, so let's take a look at what happened this week on GBP/USD and most likely what will happen next week. Okay, so we know that on GBP USD, the supply is in control. As we've seen, price is currently reacting from a major supply zone on the weekly time frame. All right. So that means ideally we should be looking for sell opportunities. Let's go to the daily time frame. On the daily, what do we have on the daily? All right. Let's check out price action or market structure. Like so, let me go back to normal candlestick and show us something. All right. So over here, what do we have? So we can see this is the high. So over here, this is the higher high, like so. Okay. And then this is a higher low over here. Right, this is daily time frame. And what the price do, we can see a break of the structure. Okay, giving us a reason that, okay, possibly this bullish momentum into this weekly supply wants to shift to bearish, which is a confirmation of that weekly supply. So price broke this zone like so, and then we can see retracement into this imbalance that's here into the supply, and then price dropping like so. All right, now this price drop like so, what did we have? Did the body of the candle close below the zone? Do we have a standard lower low? Let's check that out. The major structure you can see. So price broke beneath this zone like so. And when we see something like this, the expectation is that we are going to see a retracement like so into a supply level. Now we're going to check out a possible counter trend move that happened on a lower time frame here shortly. But let me just show you, what price might do on this guy. So this is the high, and this is the low. If we want to look for sell opportunity, because right now price has changed from this bullish momentum like so to bearish, because we have a lower low that's formed. So, and in a bearish momentum, if you want to, so in a bearish market, you want to look for sell, right? And then if you are selling, you want to sell at a premium, okay, or sell at an area of supply. So if I take my Fibonacci and I measure from this high, okay, to this low, at what zone should I be selling, right? To be on the safe side, you want to be selling above the 50% zone. So anywhere above this zone is where you should be selling, all right? And then it also coincides with this liquidity. So remember that I talked about liquidity happening here. So this liquidity that will be grabbed into this zone, all right? So in the following week, in a few days from now, where should we be expecting price should do? We should be expecting activity here. This is the supply zone over here. All right. So you want to wait for, because it's getting messy. Hold on, let me delete all of this. So you want to wait for price to retrace into the zone. And then over here, you want to look for sell opportunity. So you want to sell, and then you exit here for price to give you a lower low. So this is a trade idea on GBP USD. All right. So that's an idea. So if this zone does not hold, all right, you can use the whole of this zone because there's a cluster here. If this supply zone does not hold, that means price wants to use this zone as an inducement. So price will possibly still come up above the zone. Okay, outside this zone as well, you can look for possible sell opportunities. But let us trade what is in front of us. This zone is a good zone to trade from if price retraces there. Here. Okay, right side, please show us that fib setting. Okay, let me quickly do that real quick. It's not hard. So I believe that most of us here are already trading. and then we know what Fibonacci is, right? All right. How many of us here knows what Fibonacci is? If you know Fibonacci, please type in yes in the chat box. Let me be sure that we're on the same page. If you know what Fibonacci retracement is, type in yes. If you don't know, type in no in the chat box. All right, so Godwin knows Fibonacci, Victor knows Fibonacci, Bright knows Fibonacci. Oh, Effiong also knows. So good. So most of us know. So the settings for this is my premium and discount setting. Okay, so let me just type it in and give you the settings. As you can see, I only have 3 different levels. I have 0, I have 0.5, and I have the 1, and I have 1. Okay, so in this case, if I'm measuring a bullish move, so from a higher low to higher high, and I'm expecting price to retrace. I'm expecting price to retrace to a discount. So the discount on a bullish move is anything, right, below 0.5. All right, anything here is discount. So I'm looking to buy in a discount. This is a discount. All right. Now, on the flip side, if I'm in a bearish environment, I'm looking to sell, right? So I take my fibs and I measure from top, right? So I'm measuring from the high to the low, like so. Now, if I'm waiting for price to retrace, like so, anything above 0.5 to, 0, this is my premium. So it's a premium level that I'm looking to sell. So you want to sell at a premium, this is a zone, and then you want to buy at discount. Okay, Ambrose said, okay, good. So Ambrose, do you understand this setting now? This is just a basic setting for premium and discount. All right, so there are different ways to use Fibonacci, but for this case, because I'm only using it for premium and discount to know where I should be looking to sell and know where I should be looking to buy. Okay, so just 3 levels for this case, 0, 0.5, and 1. All right, anything below 0.5 is discount, above 0.5 is premium. Okay, is that clear enough? All right, so let's go back into what we have. So for this particular case now, this is GBP/USD on daily time frame, right? If you sell, it makes sense to sell at a premium, and then in that premium zone, we are seeing a supply zone here. So which is additional confidence you need. And then for price getting into that zone, we're also seeing price. So price is also taking liquidity before it gets to that supply. All right, so this is a confirmation, okay, that will help you give confidence to your setup. So what happened this week? Okay, this is from Tuesday and Wednesday. Let's check out what happened this week. Okay, which is a Temitope said, can you illustrate the feed on a chart? Okay, no, let me just quickly do that. Let me just show you how it works real quick. All right, so let's assume that what's it called? This has not happened. Just hold on. Let me replay this. So this is price shifting momentum. This is higher low, like so. All right, so price has broken this zone. And then when this happens, there's going to be a retracement, all right? So in order for you to know where you should be selling from, right, when you use that Fibonacci for premium and discount, when I take my fibs, I measure from this top and drag it down to the bottom. All right. So I know that if I'm selling out, I want to be selling at a, what's it called? At a premium. All right. And anything above 0.5 is premium. All right. And if you are looking for additional confluence, this right here, there's imbalance on this candle, and then this is a supply. This is a string supply. So, and then we are also seeing some form of liquidity here. So I know that based on what I've done so far, I'd be willing to sell when price get into this zone, then I sell. You see that that's what exactly happened. Let's play forward. Hold on. Okay. When you play forward, you see what price. You can see price came into that supply, into your premium zone. That was where price started dropping from. So it just helps you know where you should be selling and buying, right? It's not an entry strategy. It just helps you figure out zones that you should be trading from. Okay, so this is quite basic, actually. It's basic. There are other more technical ways to use Fibonacci when we start talking specifically about some retracement numbers and extension numbers. All right, so maybe we'll get into that hopefully soon. Okay. All right, so what was I talking about? Yep. Understood. Perfect. So let's go to current market price. So I was going to talk about what price did this week on GBP/USD. So let's check out what exactly happened here. This retracement here. So price took out this low over here, and then expectational order flow. Price should start reversing from here. So if you're into counter trend, so let's go to the 30 minutes chart and see possibly exactly what happened. All right, very, very sweet move here. Now you can see over here. Now you can see over here what exactly happened. Price is coming down, impulse move, correction, and then we can see another impulse move. All right, now that is a bearish order flow. All right, and then over here we can see the higher low was taken out. The higher low was taken out like so, and then was taken out with this move. And then if you see this kind of thing happen, you want to wait for price to retrace into a demand. This is the demand, the last sell move before the buy. Okay, over here. Okay, and as you can see, what did price do? Price came into the zone. Price did this, came back into the zone. I think this, what happened here, let me zoom in. Possibly there was a news that happened here. So price took out liquidity on both sides, took out liquidity here, and also took out liquidity at the bottom. This is on Wednesday, 8th of March, 4 p.m. So possibly there was a news event that happened here. That's why market was a bit shady. But ideally, right, you can see what price the price had to retrace into this demand zone, right? If you had a tight stop loss, you would have been, taken out of the market, or not at all, because it's a news event and maybe price just tapped into it and out immediately, or if you had a wide stop loss. Okay, but the price tapped into this zone like so, and then we can see the bullish move. Okay, price going all the way up. All right, and what could you have done? You could have just been taking entry when price retraced into the zones. Okay, so what happened on GBP/USD this week was a perfect perfect market structure. Price will beat everything to the letter. You can see as price was creating new highs, it was tapping into, the bullish order block like so. Price would tap into it, right? If you had come here, taking entry, price created a new high. What did price do again? Price tapped into the demand zone. Perfect setups. Okay, so this week on G was a perfect week for any other trader G. You can see a bullish move for the retracement, price going up like so. Price created a new high. What did price do? Price retraced and tapped into this demand like so. All right, so it was a very, very good week. So I think that's why Mr. Ambrose was able to triple his account this week. All right, so price did this internal structure. What the price do? Okay, at the retracement, price tapped into this demand like so. So it was a perfect week, guys, on GU. And you can see the move. Where is price ultimately going to? If you take a look at what's going on daily time frame, the destination of GBP USD is that price will still go up, take out this liquidity here like so, and we should see price, hold on, we should see price come into the zone eventually. So if price should get into the zone, you want to look for sell opportunities. So that's what happened on GU this week. Gordon Taco is asking me directly, you're still having issue to understand demand and supply. That's why I don't trade it. Okay, good. So, luckily for you, Mr. Godwin, so we just started a series on 10 trade. So I'll be teaching every client my trading strategy. So we started the first series this week. So this week, that I think on Wednesday, we started from market structure. Okay, so possibly next week we are going to, so eventually you will learn about supply and demand, Mr. Godwin. So you want to look out for my strategy sessions. All right, so even though possibly next week we are going to talk about liquidity. So we might talk about liquidity and a bit of supply and demand next week. All right, but just follow through. So whenever you see the flyer of smart money concept trading strategy webinar, please ensure that so you learn all about it, okay, for free. All right, so what should you expect on GU next week? Price will retrace in this zone. We should still see some bullish momentum. Price needs to take out this liquidity, definitely. Yeah, definitely. Even though we might see some retracement, but eventually price will still come into the zone. But if price comes into the zone, look for sell opportunities and short it. Can you get a link to chat me privately? Yeah, let me send my number. All right, I'll send to everybody. If you have any questions, I'm sending my number on the chat box right now. So it's available. I'm available on WhatsApp with that number. Okay. All right. So what I want to say to help you have a very good trading week, I need everybody here to have a solid understanding of market structure. All right. If there's one thing that I want you to learn, take time and learning this weekend in your free time. Understand what market structure is. Market structure. Okay, market structure goes beyond support and resistance. It goes beyond trend lines. Okay, there's so much market structure. And once I learn about market structure, I just want you to learn about order flow shifts. All right, how to know how price is moving from a bullish order flow to a bearish order flow, and how price moves from a bearish order flow to bullish order flow. Okay, let me write it down. Under order flow, your goal is to learn how price moves from bullish order flow to bearish order flow and fast. Okay, so make that your assignment this weekend if you can as well. This weekend, once you are able to understand these things and then add it into your trading plan, it's going to change the game for you. You will know exactly what you should be doing at every point in time. You will know if you should be buying or selling. Does that make sense, guys? Okay, let me know if this session has been valuable to you so far. Let me know if you learned a thing or two. Mr. Victor, Mr. Godwin, Effiong, Bright, Temitope, let me know if you are enjoying this session so far. Okay, type in a yes in the chat box if you are following what I'm doing thus far. Godwin said I've learned a lot. Temitope said yes, boss. Victor, yes. Awesome. So let us stop here for tonight. We are already past our allotted time, but I want to also recommend that we join a 10 trade live trading session. Pretty much on a daily basis, we organize live trading sessions, and on those sessions, it's a good time for you to participate and then ask the educator to help you analyze a particular pair. So if your goal is to trade gold that particular day, okay, jump online that morning or whenever we do it and ask the teacher, the educator, to analyze gold for you. So it makes sense to have another perspective as to what you're looking at. So it should help you make a more informed decision regarding trades. All right. Godwin said questions. So Godwin, I'm going to unmute you shortly. All right. So please, whenever you see live trading session webinars by 10 Trade, please join the sessions and don't just join to come and only consume knowledge. I need you to join the session and then ask questions. Okay. If your goal is to trade a particular week, tell the person to help you analyze a particular pair. Ask questions. Okay. That's the only way that you get better. All right. So Godwin, I'm going to unmute you right now. So Godwin, unmute yourself and then ask a question.
Good evening, sir.
Good evening, my brother. How are you doing?
Good evening, sir, and good evening, everyone. So, sir, my question is, I think I have like two questions actually. One is clarity on how the market is behaving, and the other one has to do with Fibonacci level actually. So, to me, the person who taught me how to trade actually is, I know is one of the biggest trader that probably all of us know about. So I trade that probably style. So going back to Fibonacci, I use levels like I use one of my key level in Fibonacci as just like the only level I trade is between 50, okay, is 61.8. Okay, so I don't know. I've heard someone, there was a time I only had to stick to what a police taught me, in which I just only trade 61.8. I don't trade any other level. I backtested it actually on a trending market, it worked perfectly.
Okay.
So that's why I just had to stick with those levels actually. So now, so a friend was telling me, I'm in school actually. So a friend told me one day, he said, he just trade anything that he don't trade 61.8 because I think he said something has to do with them. That is not a discount level. That is 70, I think 78.6 or thereabout. The other one after 61.8, that's the level it trades. So I don't know if the question I want to ask now is, 61.8, is it regarded as a discount level, or I don't know, maybe different length, something else or something, because he was trying to confuse me and stuff like that.
Okay, so let me start answering your question. Now, Fibonacci is good, but you must know that Fibonacci is also an indicator. Just the way your candlestick is an indicator, just the way you have your RSI, it's an indicator. Now, you don't trade, you won't have a very good trading experience if you're trading only based on indicators. Actually, now 0.618 is, for a bullish momentum, is a discount zone. But you must also understand that trading Fibonacci is a retail concept. Now, that means a lot of the big banks, they know that a lot of traders trade from that zone. So it's called the golden zone, from the 50% to 0.618, right? So a lot of people are looking to trade from here, golden zone, all right? So, and they know that a lot of people's stop losses are below the zone or at your 0.736, okay? Now, what will really change the game for you, like I said, is when you are trading using Fibonacci, use it as a confirmation, not necessarily a reason to enter trades. Now, your only reason to enter trades should be based on, number one, market structure, right? And based on order flow, know exactly the structure of price at any point in time, all right? Now, if price has retraced to your 0.618, for example, is good. So you know that based on Fibonacci, price should retrace here, right? Now, that should be your first level of confirmation if you use Fibonacci. So you need additional confirmations to use Fibonacci. Nobody trades Fibonacci in isolation and expect to be profitable most of the time. All right, is very profitable, like you said, in a trending market, but even at those times, it's not 100%. All right, so you want to add some other things to your Fibonacci: market structure, liquidity grabs. Very, very important, because before, if price will take off from 0.618, like so, that means a lot of times at your 0.5, there would have been some inducements for liquidity grab. All right, so possibly price will give you something like this on 0.5, maybe like a double bottom, like so. So next time that price is retracing into the 0.618, then that means there's like an inducement or a liquidity grab that will make that 0.618 zone valid. All right, so Fibonacci retracement zones are not valid in themselves in isolation. All right, so other things make those zones valid. When you don't see those things, then your Fibonacci levels are not valid for you to place entry. It's just an indicator. When price gets into that zone, you need to look at other things that has to do with the market, the structure of the market at that point in time when price retraced to that zone. Let me know if that makes sense, Godwin. Is it a bit clearer to you? You are right by wanting to buy at those, yeah, but you need additional confirmation, okay? And that's why I said that this weekend, do your possible best to learn market structure, learn order flow shifts, and learn about liquidity grabs. All right, and then it will change the game for you.
All right, sir. Thank you very much, sir.
You're welcome, brother.
Yes, sir.
Bright, is that Bright? Do you want me to unmute you? You are raising your hand. Bright, so unmute yourself and speak if you can, if you've left the noisy environment. Go ahead, Bright. Bright, we cannot hear you. Okay, I can see your chat. You said, when will the MS and other shift class hold? Okay, market structure. So the market structure class the replay is currently on the 10 Trade YouTube channel. So we held the first session either on Tuesday or Wednesday. So you want to go to the YouTube channel and then you locate the session on market structure. All right. And then for other flow shifts and other things, we should hold another session next week. All right, so just be on the lookout on our WhatsApp groups and Telegram groups for my session. Okay, my name is Tobi Okunaga. So when you see a session by Tobi Okunaga, so do your best possible to participate. Okay. All right. Any other questions, guys? Any other questions? Any other questions? All right, so I want to believe that possibly by the grace of God and by your own right efforts, next week will be more profitable for you. Mr. Ambrose, remember to send your prophet offering. All right, you cannot triple your account. Mr. Ambrose turned, okay, I think he has left this session, right? He grew a 1K account to $3,000 this week, trading just one pair, GBP USD. All right, so you cannot triple an account and don't send prophet offering, okay, using what you learned from us. All right, so I believe that we would all have an exciting week next week. When you trade market structure, okay, why Mr. Ambrose was able to make that kind of money was because he was trading with the strength of the market. Okay, it was trading with the momentum of the market. All right, so price was already bullish and it was only entering bullish setup. Okay, if he had been entering sells, he would have been losing, but it was winning because the momentum of GBPUSD was bullish. Okay, so likewise, how will you know if you should be buying or selling? Market structure plays a role. You might have a very, very good trading strategy, but when you implement your trading strategy outside of market structure, then you are going to be losing a lot of trades. But when you merge market structure plus your trading strategy, your win rate is going to improve. Your strike rate will improve. You will stop entering into a lot of fake outs. All right. So I know what I'm talking about. Do your possible best. Go and study market structure. All right. For the most of us here, we might not know so much about market structure. Market structure is beyond support and resistance. It is beyond trend lines. Okay. So please take that time this weekend, and study. Go on YouTube. You'll see a lot of free videos that teach you market structure. Or what you can do is to go to the 10 Trade YouTube channel. Okay, you see my video on market structure. That will help you get started. All right, so let me say thank you everybody for being a part of this weekly market roundup. If you have any questions, feel free to reach out to me. I've sent my number on WhatsApp, on the chat box. You can also reach out to your account officer, all right, and get your questions answered. Okay, Bright is asking a question. I would like you, sir, to think about something that would help us do better, like coaching. All right, so, well, what you can do, I would say, we usually give people, because normally if I'm to coach you personally, my coaching is $1,000. But if you are a client of 10 Trade, all you have to do to get access to 30 minutes to 1 hour of coaching with me or one-on-one with me, just make a deposit of $500 in your account. So Bright, if right now you have over $500 in your account, right, you are qualified for a coaching session with me, 30 minutes to 1 hour. Okay, if you do not have, right, just fund your account with $500, right, and then reach out to me, and then we schedule your session. All All right, so that way you won't have to pay any money, because the money that you're even funding your account with is your money. You can choose to trade with it. Okay. Temitope, you are raising your hand. Do you want to ask a question? You can unmute yourself and speak now if you have a question, Temitope.
Yeah, good evening, boss. Good evening, sir.
Hey, good evening, sir.
Yeah, good evening.
How
So
you doing?
the question I'm fine. I'm fine. The question
Awesome.
I want to ask is that I with same trade, I heard that if someone fund account with, let's say, minimum of $100, that the
Okay.
bonus that will be given, the bonus that someone has to trade up to 5 lot size before he can be able to withdraw from the account.
Okay, no. So you have to understand now. So if you deposit $100, if you want to withdraw the bonus, so let's say we give you a bonus of $50. So you deposit $100 and then we give you $50. So that means you have $150 in your account.
Yes.
Now, when you make a profit, you can withdraw your profit without having to meet any lot size requirements. But if you want to withdraw the bonus, right, you must have some certain lot size. So that's a minimum of 5 lots that you need to have to
5
withdraw
lots.
bonus.
That's what I heard. So the lot size, is it micro? Is it 5 micro lot size?
Standard.
Standard. Okay.
Standard, yeah.
5 standard lot size.
Yeah.
Okay. So if someone have that $150 in the account with the bonus, someone can even withdraw anytime.
Exactly. You can withdraw your capital and profit you make at any time.
Okay, but it will only remain the $50, which is the bonus.
Bonus, yeah.
Okay, now I understand. Okay.
Yeah.
All right. Thank you very much, sir.
You're welcome, bro. All right, guys. So let's have a remarkable weekend. I wish us all the very best this weekend. I'll see you on the next webinar next week. Good night, everybody. God bless you.